Hello, YouTubers, friends, compatriots, Bluegrass, Tesla, Search, Peasants, Vassals. I'm a useful idiot, and today I want to talk about rental-backed securities. And this is a new security that's being put on the market, and this is a brand new exotic financial instrument. And it's exactly what it sounds like. So we previously, during the last economic collapse, everyone found out about mortgage-backed securities. And now we have rental-backed securities. To put it in a nutshell, essentially all these loans are created, and then the banks slice and dice these loans into new financial vehicles and sell those to investors. And that's what we have now with these rental securities. And they're backed by rental cash flows from tenants living in foreclosed single-family homes that were bought up at rock-bottom prices. And what could possibly go wrong, right? So now we have a brand new derivative. And on top of that, of course, there's going to be a whole bunch of credit default swaps sold on top of these rental securities. And the monthly rent checks, so initially the monthly rent checks from 3,207 properties will be used to service over $480 million of debt in this first offering of asset-backed securities backed by rentals. And think about that for a minute. They're only going to use the cash flow from 3,000 properties to generate $480 million of debt. And the cash flow analysis, this is another flaw in this whole analysis that the banks in Blackstone have done. Is their cash flow analysis assumes a 95% rental rate, constant occupation, at an average monthly rent of $1,312. And there's a couple problems with that. One, of course, is there's deflationary forces in play. And even though rents have gone up as a part of this artificial housing recovery, maintaining $1,400 a month rent on a lot of these properties is going to be challenging with all these deflationary pressures. And then, of course, assuming that they're going to have 95% constant rental occupation is a stretch as well. And in fact, Blackstone already knows this. In one market, in Charlotte, North Carolina, Blackstone has filed evictions against 10% of its renters, 10% of all of its renters. So there's already a large turnover in just that one market. So anyway, and then inflation, price inflation is already built into these securities because they're already being rated AAA right off the bat, even though the whole premise of rental-backed securities is pretty flawed. And then we have the usual people handling this thing too: Deutsche Bank, J.P. Morgan, Credit Suisse. They hope to do $10 billion in these securities initially, and they think potentially the market for these rental-backed securities may reach upwards of $900 billion. And like I said before, what could possibly go wrong? And Blackstone has invested $7.5 billion in distressed properties, 40,000 distressed properties to be specific, and that now they are the largest real estate holder in the United States, the largest equity fund in the world. And they're also going to move into foreign markets too, and they'll help reinflate the housing bubble in Europe as well. In fact, 34% of the properties that Blackstone have bought up are in Phoenix, California, and Florida. So they really go in and scoop up huge amounts of properties. And the other thing that makes these securities vulnerable, of course, is the tenants having to deal with, or Blackstone having to deal with property taxes and actions by local governments that affect their expenses maintaining these properties. And of course, Blackstone is hoping and counting on the fact that they're going to have to do low maintenance. And that has been borne out by the information that's come out so far about Blackstone's properties. They're not putting much money into these properties. And I guess Blackstone has figured in that sales of properties, even at a 40% drop in prices, would still recoup their investment. So a collapse with these rental securities would still put Blackstone ahead, although it would wreak havoc on the general economy. but the prices could drop 40% and they would still recoup their investments. So that gives you an idea of the rock bottom prices that an institutional investor going out into the real estate market and paying cash can get prices that are 40% below market level, and then help single-handedly to reinflate the housing bubble or real estate market by 20%. So pretty good system. So anyway, just want to bring that to your attention. We have a new derivative, a new ticking time bomb put into the financial system that's very much akin to mortgage-backed securities that helped blow up the economy last time. And we could find this to be a very, very, very dangerous trend. So rental-backed securities provided by our friends at Blackstone. I'm a useful idiot. Don't you be one too.